Good afternoon all. This is Rakesh here. I work for Andhra Capital, the monitoring team. Today's talk session is about, just 1.5 years back we had a crisis in the overall microfinance sector, and that sparked in Andhra Pradesh. And actually that particular incident changed the overall picture of the microfinance. It was the biggest hurt that we had in past. Post that, what has happened is the entire sector took some time to realize that what are the various things that they should start doing it before it gets further worse. So my presentation will capture some of the strategy, adaptation towards the new environment, and the emerging risk management strategies that various MFIs have chosen. Just to give you a background that whatever I'll present here, some part of it is from the secondary study that we have done, but 80% of it is through our regular monitoring visits. So last year we conducted about 52 monitoring visits to 25 entities, different entities, and we came across, visited about 17 states across their geographies, and these are some of the, summary of those observations that will come. So I'll start with the context. The October 14, 2010, actually the AP government started the ordinance, which later converted into the Act, and which says several negative things about the sector. Basically, these are the 4 things that they have highlighted as part of the problem, the entire problem with the sector, that MFIs are not, transparent about their pricing, the lack of consumer protection system that they are following, a lack of operational transparency, whatever they are doing, they are not communicating with their customers, and definitely there was issues of multiple lending across geography, especially in southern part of India and Madhya Pradesh, that was traditionally. So this actually had a very severe impact over the industry as such. Repayment issues came down very severely. It came down almost 0% to AP, but places like Calcutta, places like West Bengal, MP, Rajasthan, the delinquencies has gone very, very high to that. Then MFIs, post that what has happened is banks started losing confidence over the microfinance sector as such. And then they stopped disbursing to a lot of MFIs. Only that point of time, if I remember correctly, Bandhan was the only organization who was getting funding. The rest others are, just waiting for the days to come for them. Later on, Government of India set up Malegaon committee to study the impact of the entire episode that has happened. And later on, RBI also came up with its own set of guidelines for the entire sector, which captures regulatory changes, the operational changes, the organization changes, reporting structures, and more of a risk management practices that could evolve into a safer side. So in order to understand the impact that has provided the entire crisis, if you see the last 2 years, 10, 11 and 11, 12, the borrowers, the percentage has gone down by 28%. But non-AP MFIs have actually maintained the same level of penetration through their borrowers. The disbursement has gone down by 67% overall. The pan-India has gone by 38%, but in AP, it has gone down by 67%. But thankfully, non-AP MFIs actually did better in 2012. The disbursement has gone up by 5%. If you see in terms of gross loan portfolio, 2011-12 has been very good for non-AP MFIs. Basically, their disbursements has gone up by 22%. But overall, if you see, it has gone down by 15%. So which is actually a lot. If you have following the trends of growth in last 5 years across the country. But there has been some very significant positives that has come over last 2 years. If you see the PAR movement, the non-AP MFIs still continue to, manage their PAR percentage less than 1%, which was very heartening for the entire sector. If you see the write-offs, especially, the Pan-India has seen lots of increase in the write-offs, but if you see the non-AP MFIs, the write-off has gone down by 45%. Now, while I'm saying these two heartening factors, one is PAR, maintaining PAR less than 1%, and write-off is going down by 45%. This is not just an incident that has happened actually. Post-AP crisis, lots of MFIs has transformed themselves into better risk management practices. They adapted differently to the changing environment. Now, I'll speak on what are the different changes, adaptation or strategies that these MFIs have followed. I'll be mostly talking about these four. I have categorized my presentation into these four categories. One is regulatory and political risk that MFIs are dealing at present, through which means. Second is about the operational risk management, which basically takes care of its operation and the various risk management practices. One is the funding diversification, because prior to AP crisis, majority of the funding was coming from the banks and that too in the form of debt. But other funding vehicles were available, but people were not aware about to take care of those. So how those scenarios got changed, and some innovative practices which many of MFIs have chosen to practice based on their geography and socio-cultural environment. Sorry. So if you are aware about various regulatory requirements that are laid down to us by RBI, these are some of them, like qualifying assets, loan pricing regulation, fair practices, prudential norms, and corporate governance. Now, each of those, if you see on the qualifying asset, RBI says that your interest rate should not be more than 26%. Your loan processing fee should not be more than 1%. Rural and urban income categorization they have done. For rural part of India, they said that 60,000 annual income. For urban, they said 1.2 lakhs per annum. Any loan which is greater than 15,000 has to be more than, not less than 2 years. That's what they said. 75% of their assets should be on a income generating activity. So whatever loan that they are making should go into the income generating activities, and 80% of their entire portfolio should classify as a qualifying asset by them. Now, how MFIs are dealing with these issues? If you see that they have come out with their documented policies which takes care of their credit origination and qualifying. So now what they are doing is, any proposal that they are submitting presently, they are actually doing a thorough due diligence by the chartered accountants, which actually certifying that all the above criteria are being met and how much of percentage that they are into their qualifying asset, which is maintained there. The framework to classify their loans. Now, there has been a debate across the sector that what is productive loan, what is non-productive loan. For many MFIs, they said education loan is a productive loan, but many others who said education loan is a non-productive loan. So they have come up with their own set of policies which categorizes that what is a productive loan for them, and accordingly they have been classifying those. So they have come up with it. And then mechanism to access the customer income and expenditure, because that was the critical part. Now, there has been a debate that whether 60,000 is enough or 1.2 thousand is enough. Our monitoring data says that if you say more than 70% of the rural population that we are catering to have income level more than 60,000 per annum. But what MFIs have done to encounter this risk is they are taking a declaration from the customer that their annual income is less than 60,000. So that's how actually they are managing their regulatory risk. But if you see, but what has positive that has happened after this crisis is 80% of our sector is completely on Grameen methodology, wherein cash flow analysis is not part of a regular credit appraisal process. It's more of a joint liability concept that we see, and we see that people are engaged in some constructive productive work. But post that event, actually, many of the MFIs have started doing cash flow analysis. So I'm not saying it's enough, but at least it has started somewhere. So that has actually people started doing it. Then periodic monitoring and reporting has started in the compliance form to RBI. So that has very prudentially people are doing it. Effective internal audit system. Many of the MFIs earlier they have outsourced their audit process to various external audit firms. But now if you see 95% of the MFIs have their own internal audit system and department in place. In terms of accountability, board has taken, majority of acknowledgement that risk, that they are ultimate responsible for regulatory risk. So now whatever reports that people are sending or MFIs are rather sending to the RBI, it has to be board approved. So now these things are taken care of very seriously by board. Internal monitoring framework has to, ensure that all the compliance which relates to operational or the regulatory compliance has to be part of your internal audit process. So that has started coming. And, reporting in such, first, the internal reporting system has been strengthened, and then the communication and advocacy that they are maintaining is through a different channel that they are doing right now. Second set of risk management strategy was strengthening the consumer protection set. Once we talk about the customer protection, basically we speak about these four parameters: over-indebtedness, transparent pricing of the products, fair pricing norms, and grievance redress. So if we see, the avoidance of over-indebtedness, almost 100% of the microfinance institutions have shifted or rather started using credit bureaus, either in the form of high mark or Equifax. So we have listed some of them, which you can see that many of the institutions like Fusion Studios or Satin, they are part of both the credit bureaus. And if you see the rejection rate, earlier it was quite high, but over a period of time actually it started going down. The recent trend that we are currently looking at ground is customers are coming upfront and saying that yes, I have 3 loans, I have 4 loans. Earlier that was not the case. That's why the rejections were very high. But now they know that they have a system to check. They are coming forward and saying yes, we have loans. So that's why the rejection rate. They have a system wherein each and every loan has to be supplemented with a credit bureau check. So what is the criteria of rejection? Criteria of rejections are two. One is bad credit history, and second is if you have more than 2 loans. So these are the two reasons that right now.
How the rejection rates are higher? Previously, the rejection rates were on the higher side.
Yes.
What was the reason for that?
Reason being, the first level screening was not done because people were not sure that how these guys will able to know that I have 4 loans or 5 loans. So they were, while filling the application, they were saying I have just 1 loan from XYZ. But later on when you check with the credit bureau, you found that there are 5 loans with them. So now people know that whatever they say, you are anyway going to check with the credit bureau.
So that truthfulness is if we are following that Grameen model, in that model, if they are actually following it, it doesn't matter if a person has 4 or 5 loans, as long as the group is comfortable with the person, right? The loan should be approved, right? That is the Grameen model.
No, see, there are two things. One is
whether as an entity I take it for that I will not. That is what I was asking. So this is entity rejection. This is not a credit bureau rejection. Yeah. Credit bureau is giving a report. Then
This is a policy decision which groups of MFIs have taken, but they will not go ahead with more than.
Rejection is not from the high mark or
It basically is the risk mitigation strategy which the companies have adopted post the AP scenario.
I think what it reflects is that
these people have got these many loans and that's what it says. Now you read it and then you say, if you have more than 4 loans outstanding with you, if you have bad credit history, now it's your call. You want to take it or not?
They have the policy that they will not be third lender.
Are there any other reasons for rejection falling down except the credit bureau element? I think that is really
that was one which I said that people are honest and coming forward and saying yes, I have more than 2 loans. So the first level of screening is done. That's one. Second, because of now I think almost a year we have started using credit bureaus. So the multiple lending, the intensity of multiple lending has gone down. If you see MP, in one point of time, Bhopal had about 13 MFIs, bigger MFIs working. And if you see places like Ujjain, Indore, Bhopal, especially the older Bhopal, one person would have 6-7 loans. Now if you go, nobody is giving loan more than, if you have 2 loans, then they will not. So automatically the intensity of multiple lending is going down.
Just to add what Rakesh said also, even MFIs have withdrawn from places where the concentration was high, like Bhopal, Ujjain, Indore, or you take Jalna, Parbhani, Nanded. So there are only very few MFIs right now operating there. So that also will be part of it.
Is it also linked to the fund availability?
Not really, because what has happened is, I'll show you how funding was not a constraint in 2011 and 12. Though it was
relative comparison period. When you say the rejection rates had fallen.
It has last 1 year. Last 1 year.
Right. So
this is a high mark.
Yeah. So apart from this post AP event, many of the MFIs have actually shortlisted some negative areas where they are not disbursing any loans. So that's the 3 reasons I can see wherein rejections are going down. Because first level, yeah.
Is it for like new members or each time an application comes, even though he's an older member as if he's in the second cycle or third? Because as the vintage increases, maybe the organization itself has some sort of a credit record of the client, so that might also lead to a fall in rejection.
So one of the reasons of the rate going down is few established players have list of dropouts as well as clients who are native clients who maintain this. So they do the deduping before selling it to selling it out to the trade bureaus. So it's one of the reasons of the rates coming. Actually, irrespective bureau should have been happening, right? Exactly. And this is a post factor thing, right? People. So, and secondly, the thing is, if you see 11-12, that we'll see the funding, but practically quite a few organizations in initial period of 10-11. Second half definitely faced a lot of issues getting new funding. Right. 11-12 started picking up. Of course, securitization kind of things were there and they kind of continue. ESL still continue. But 11-12 still have seen some more funding flowing in. Yes. That could also be again a factor. Is where
See, one thing is for sure that if you stop disbursing, then your rejection rate will automatically go down. But that's not a straight correlation that you can think of. But one way you are right that if your disbursements are going down, then definitely rejections will also go down. So one way I take your point. But these 3-4 were the major fundamental issues. Because why we say we selected these clients, because Utkarsh, if you see, last year they were about 24 crores outstanding. Currently they are 72. So they have grown to 3-fold. So they have not been into that liquidity crisis as such across the year. Similarly, Ujjivan, Disha, Fusion.
There's actually a big difference in Utkarsh's rejection rate, particularly talking about the time.
See, Utkarsh, they are operating currently in Western UP and Bihar, wherein the MFI penetration is very low. Whatever rejection that they are currently getting is from the urban areas that they have started recently. Because urban centers were initially densified by lots of MFIs. But later on they withdrawn and they have not gone to the rural areas. But their primary focus was mostly into the rural areas. Now they are coming into urban.
Sir, one situation. Yeah. You said they take a declaration on the income front. So assuming that he has a 15K income, you take a declaration for 5,000 rupees. So technically he has repayment capacity. So now he is repaying his loan properly. So we are migrating to this credit bureau in between. So he has already 2-3 loans outstanding, and he has a great track record with your company. Now next cycle he comes for a loan, but now you have in between migrated. At this juncture, what is the call the company should take? What is your recommendation?
See, I won't say that what should they say. I mean, RBI clearly says that any MFI should not be lending to a customer as part of the third lender.
RBI also says income should not be greater than 5,000. But there you take a
minimum 2 loan outstanding.
Correct. They are not telling you take a declaration. They are telling
No, they are not saying. They are saying their income level should be.
If you see the first part of risk management, everywhere you see document. Most of that is. So documentary evidence to ensure that I am completely. Key point here is credit decisions rest with you. You got to take. And only thing is, if you don't apply with these norms, you won't get RBI's that window.
And beyond whatever RBI has, said, if I sit in a current situation with a family income of 5,000, with a liability of 5 people, I think I would die. I would die. 5,000, it is, I don't know from where this number came. I'm not saying it's low, it's high, or it's appropriate, but definitely it's not something which is practical thing to work on this. Okay, so people have got their own management system to deal with it. They cannot say that.
the same logic. RBI says your individual exposure can go up to 50,000 rupees.
Yeah.
Right. So 50,000 rupees, suppose you convert that into a 24 equated installment. How much it becomes? It becomes at least 1,200, 1,300 rupees. 1,300, 1,200 rupees. So does it mean they say 25% of your income can go to repayment? That's how society says.
That's why it is consistent. If you see national bank, 40% of your income is supposed to go for EMI. So therefore, RBI's policy you can't find whole at all.
No, I'm not trying to whole. I'm trying to decipher it.
No, that perception is 1,000.
Is that a benchmark? Is what I'm trying to find out. From your experience,
It's not a benchmark, sir. I'm saying you, in a current situation, we have been, visiting across geography.
5,000. That is for housing loan repayment, not for your consumption.
No, I agree. Here, consumption. That is why the shift is already 85 is anyway productive person.
No, I'm just trying to find out whether you have seen any trend on your 17 state visits.
See, if you see the eastern parts of India, there actually you will find the genuine customer, right? If you visit any village of Gujarat, you won't find any family less than 15 or 20k income, but still MFIs are working and they are taking declaration. Nothing else.
There.
So I mean, what I'm trying to say here is there should be some criteria to fix on the MFIs. That it's 5,000, 15,000, that's fine, right? But it should not be a blanket. Right, in Gujarat, in Punjab, the per capita income is much more higher than in Bihar. So you cannot take a single stick and measure each and every individual across the geography. Right. Then it's transparent pricing. So now with fair practice code, people have started putting vernacular things, all terms and conditions, prepayment, everything is captured. So we have just put one loan card into it. Though, see here also, if you see, customer protection also says that you should have a different customer grievance number, where customer, if they have complaint, they should call. And many of them use this number. This is nothing but an address. They say, yes, wahan pe hai number. But actually this is not a grievance number. So people actually are migrating from this number to a if you see the fair practice, the terms and conditions are putting into vernacular language. Communication. Now many of the MFIs have started doing sanctioning process. Earlier it was not the practice, but now with the fair practice code, it has started coming in. They are also putting in the loan agreement in a vernacular language wherein all the terms and conditions are mentioned there. One good thing is, the board of directors of NBFC has started taking a stock on a periodic intervals that what are the fair practice system, whether the trainings, whether the processes are set or not. And disclosure in the loan card, though it says that the member should not be more than one SSG and part of GSG, but it is not practiced across geography. We have found only 15% of our clientele falls into the fresh, they are taking first time loan. The rest 85 are the old borrowers. Redressal system, we said that, people have started moving into toll-free numbers. They have separate department who deals with these. There are separate boxes, registers that they are maintaining at present. And one heartening thing which has come out is board or executive committee started reviewing those processes. So that's in terms of communication and advocacy, they have set a different department altogether wherein these things are maintained because they know that whatever crisis that has happened is due to the communication gap between the government and the microfinance institutions. Microfinance institution, they thought that since they are working with the poor, so nothing can touch them. But actually there was a gap between the, political set of people, the kind of people who influence the policy making decisions. There was a gap. So now there is a separate department with each and every MFI is working on communication and advocacy. Now I'll jump to the operational risk management system. Now you have to operate. So, I'll say that 90% of the MFIs has actually moved from weekly to fortnightly or the monthly system. Why this has happened? Because of two reasons. One, RBI has capped the interest rate and within 26% with 1% of loan processing fee, with prudential norms of provisioning, with delinquency, it is impossible to run the business. So monthly they used to go 4 times to each customer. Now they are going once or twice.
How is the repayment track now after 49 days?
All the same. It's all the same.
Yeah, the attendance has improved. We are seeing the attendance has improved significantly.
That's a positive change.
Yes, that's a positive change.
So if you see the MFIN data, it says that staff productivity has gone up by very slightly. But if you see our clients, our partners' performance, it has a significant jump. If you see the loan portfolio, gross loan portfolio handling by a single loan officer, it has gone down from 2 million to 3.21 million. So it has actually seen some positive effect. If you see the OER ratios among our partners over the years, last 2 years if you see, there has been a significant decrease on the OER. I'm not saying that just they have moved from weekly to monthly, it has contributed. But yes, it has a major share.
It definitely contributes. But how long this is happening, this practice?
It has almost a year. They have started in the month of May, last May.
You have started May, it's like...
So it's almost running for quite a good
Yeah,
year.
It's almost a year. It's almost a year.
It's no more in any pilot case.
No, not at all.
Is there any indication on how much is the change in OER on account of this shift? Or is there any possibility?
Very difficult to find, that just you have shifted this, so your OER has gone down. It has a impact.
We know that there is an impact, we don't know how much.
Exactly.
Over a period of time, even, as such, staff reduction, etc. might also have irrespective of this or not.
Because I'll come to those, because one of the risk mitigation strategy was consolidation. So that also contributed into, decreasing OER. Go back. Sorry. Okay, I'll go back. Sorry. We have also...
But net, are we saying that in some sense, this regulation indeed is bringing efficiency, at least that's what is visible in the year?
Yeah.
Whatever is the underlying reason.
We have also seen that, there has been some organization structural change that has happened post this AP crisis. Like, some of them like Mimo is, for example, have removed the area manager concept from their operation. Cashier has been removed from Fusion and Suryoday. Earlier they used to have one cashier each and every branch. Now they have one cashier in one area office. CREM in JFS, Jan Lakshmi, they have removed. So now regional managers and IntelliCash, they have removed. So they are making their own ways to adapt to the changing environment.
That is on account of what?
Sorry?
On what basis this structure or all changes they have done?
On account of less number of customers being handled, as well as the area.
Shifting customers from weekly to fortnightly?
Weekly to fortnightly, then there was an entire process map that has happened in terms of duplication of work that they have seen, and then they have decided whether it's area manager or the regional manager. For few of the geographies, it's the area manager. For few of the geographies, it's
That has been done even for loans which are less than 15,000?
15,000. More than 15,000.
No, less than 15,000 also
Less than.
they have done
Yeah.
their repayment?
No. It's only like the repayment has been for less than 15,000 has been less than 1 year.
So they will be continuing to give new loans also, no? Right. Then for those customers they will be coming on a weekly basis.
No. They have shifted entirely on fortnightly or monthly.
So because Malayalam says up to 15,000, rather above 15,000 it is mandatory for you to give yearly repayment.
Right.
So it means you can give a 1 year loan for 15,000. But you said these companies have shifted to 2 year repayment.
No. I'm not saying that. And that has not been the practice. We are simply saying they have moved from weekly to fortnightly and monthly.
Yeah, that's it. Repayment mode has been changed. Not the total
Irrespective of the loan amount.
If you see the branch consolidation, the MFIN data says that, overall pan India, over the years, 11, 12 and 10, 11, you see a decrease of 13%. With non-AP MFIs, the decrease has been 5%. But if we see our partners' performance, we can see that 8% of decrease that has happened on the branch consolidation. So now people are managing with, this is 25 MFIs data that we are presenting to you. So the overall decrease has been 8% here. Sorry.
You follow?
Yeah. So many of them, 85% of their portfolio should be into qualifying, and rest 15, among that 15% people are actually doing lots of pilots. So they have started new products like affordable housing, gold loan, small business loan, STVL. They have started within that 15% of vintage. So that's the, again, one adaptation.
Any particular player amongst these who's doing it right now?
Equitas has started STVL and affordable housing. Ujjivan has started small business loan. Vistar has completely moved from microfinance to SME.
JFS is into housing loan, small business loan. Yeah.
Satin has started
Gold.
and small business.
This is into small business loans. They just
So
started.
the small business is picking up very fast.
And is it mainly like an Equitas model is separate?
No. Equitas, they have separate them, but many of them like Fusion, they are doing STVL within the same entity, under 15% vintage. Like Vistar, they have completely moved, 100% moved from microfinance to SME. People have started new, ways to keep engaged with the customers. So new relationships like health camps, financial literacy, cattle camps, especially in Gujarat, Disha, Pahal, all these, they have started aggressive cattle camps. Financial literacy is one part. Almost all of MFIs have engaged themselves, either in terms of audio-video aids, or they are using very focusedly on the CGT process. Now this is slide, the overall, if you see the diversification of the sources, as I said that pre-AP events, most of the 85% of the funding was coming in the form of debt. Now actually people have started finding alternative funding vehicles like securitization and NCD. If you compare last 2 years, 10, 11 and 11, 12, it has actually gone up by 100%. So it's actually doubled. If you see our FMR portfolio, there has been a significant jump. Last year we did about 527 crores business. This year we did about 811 crores. And these are some of the entities that we have worked with in various transactions. So, the overall funding diversification is one of the risk mitigation strategies for various entities. So this is it about my presentation. Any questions? Please do ask.
Overall, because of whatever has happened, one thing is put together is that probably there is a push for them to definitely bring or at least explore over the avenues of operational efficiency, right? So that is one. Two is probably by force or otherwise, look at what more products can be offered to the customers which makes sense for the company, not necessarily for customers per se.
First point, 100% agreed with you that, with 26%, with this amount of door-to-door collection, with small loans, it's very difficult to manage such a huge portfolio. So you need to bring in some system wherein your staff productivity goes high, your OER goes down. On a second account, which you said, what you said?
New products.
One is there is a set of people who have completely moved, like Vista. That's one. Because they are not NBFC MFI, so they could charge anything they would like to. That's one set of MFIs. Second set of MFIs, they're still focused on their core objective, but still they have a vintage to play with within 15% of the site. So they are actually trying to see that whatever they are losing in 85% can be achieved through 15%. And third set of MFIs are that whatever it's 85 or 15, they are charging as per the cash flow analysis.
So out of the overall business shift, like how much in terms of your coverage or knowledge, how much business has shifted towards MFI and NBFC categorization? I mean, institutions have taken a call that will be only that, or some might have said that. And how much has said that less the NBFC and
less than 5%. If you constitute the overall microfinance, less than 5% shift that has happened. Less than 5%.
Shift to non-MFI NBFC.
Yes.
So have you more or less said that less the MFI?
Yes. I think within our partners, only one.
That's it. They're still sticking to their core business of microfinance. Still have a lot of hopes.
Is there any particular reason why MFIs don't consider merger as a good approach to tackle this kind of situations? I don't see, because during the period of that time when the crisis was there, people are expecting lot many mergers is going to happen, but we're not observing any.
There were a lot of attempts in between for, but
too early, we were expecting lots of merger, but perhaps the kind of valuation, etc., things are not working out properly.
Geographies, the processes.
Yeah, people are trying. People have tried it, in fact. If I tell you without taking few names, I know two entities in discussion with a bigger entity to sell their portfolio in Uttarakhand and UP.
Okay. There are also chances of buyouts also which actually have not taken place because of valuation reasons or because of different geographies or processes which are there. Do you have apprehension like the kind of HR which is going to come in, the person who are going to come in, basically the lower people matter more in this whole industry. So they're more concerned on how they're going to actually come and gel into it.
Actually, one of the factors which couldn't been captured in the presentation related to URL. There has been lots of portfolio sell out by NG-MFIs to larger NBFCs. But we don't have such data to share with you that how much it has happened. But we know 5 or 6 cases wherein specific geographies NG-MFIs have sold their portfolio to NBFCs.
I think the usually or securitization of portfolios those have happened because the banking and other funding lines for terminals kind of thing were dried up. Right. You didn't have any other choice. The time you were driving in for equity and all. So obviously whatever is available on the plate, you take it and do it kind of thing. What is interesting is what you mentioned that while we generally believe that the JLG model across country, let's say broadly, is same and there is a particular approach to follow and there isn't too much mild application to happen or wasn't too much, then why would it be difficult to believe that this person will not follow the same practice if I acquire it? And especially on the ground, it's very much similar approach. In fact, we see people who manage the centers, so to say, would go to the other MFIs and say, listen, this is a client base I have and I can shift you, give me more money. That's what you know.
The problem is, it's not exactly the same that you are describing. If you see on ground, one MFI has a different motivation system or the incentive system to, drive to those numbers. Like there are MFIs who only talks about the number of clients that you are servicing. On account of that, you will get incentives. There are MFIs which says your internal audit score should also be part of your incentive system. Your OTR, on-time recovery rate, should also be part of your incentive system. So it's all not the same that looks like. So one set of MFIs, they say boss numbers. So more you serve customer, more you get incentive. Forget about recovery rate. That's what happened with many bigger MFIs.
I've seen a merger between Annapurna and Trident Microfinance, which was in AP. I was part of Trident post. So I've seen that the portfolio which was actually bought out or the merged portfolio didn't perform well, but our portfolio which was generated by Trident performed well. The reasons are you have a kind of staff which were groomed. They were there for 10 to 15 years, and you cannot change them.
That's even more interesting. If you don't change the staff, the existing portfolio from the same client more or less is not performing, and the new loans are performing better. How would that happen?
That is happening.
So that's interesting. What would be the reason? The same guys are giving and the same.
If you see Chennai, the specific example, Chennai. For many of MFIs, Chennai is a bad portfolio, first portfolio. But for certain entities, it is very good, which is performing more than 99% because of process focus.
Sure. So are you saying that? No, what I'm not able to understand is after acquisition or after merger, let's say, everything is Trident's portfolio and people are from Trident or acquired, the guys from the other side who joined in. So the same people, lending to the same guys, portfolio is also belonging to the same customer class. Why could there be different behavior?
The person who are handling that portfolio, no, they are not changed.
Right.
They are from the old organization.
Right.
But the newer portfolio is from new guys who are from different. So that made a difference.
So like in Gopal, one of the customers said, "आप बार-बार हमें मीटिंग के लिए क्यों बुलाते हो? बंधन वाले तो हमको ज़्यादा पैसा भी देते हैं, मीटिंग के लिए कराते हैं." So now same set of customers, if you acquire, people will expect the same set of practices that was followed by them.
Even after a merger of 3 years, there is a difference between the Ajivika portfolio and the Fusion portfolio in Delhi.
Right.
Ajivika is performing internationally.
And we have seen that actually. If you see, there are 25.
One of the NGO which was working in slums of Delhi, they sold their portfolio to Fusion.
More interesting is we have 25 MFIs who have 25 different types of processes at every level. There is slight change where you can see the difference. And every time we go and meet them quarterly, I think sir will know better because he will. we see that different. If it was same, we don't have to actually go and visit them on a quarterly basis. That's right.
Anybody?
Thank you, Raj.